Today, we're getting laser focused on a tactical playbook for Broadcom's upcoming earnings. We're going to move way beyond the headlines and give you an exact game plan for this massive event.
Before we jump in, you know the drill. Please remember this is a detailed case study and it's for educational purposes only. This is not financial advice, and you should always do your own deep dive research before making any investment decisions.
So we're always breaking down setups like this to really demonstrate what strategic thinking looks like around a key event.
What you're looking at here is a tactical scenario playbook. The timeline is super specific. We are focused on the window from March 2nd all the way through March 23rd, 2026. This is not a long-term hold, folks. This is a precision strike.
So here's the stage. The stock is sitting at $319.55. The big catalyst? It's that Q1 earnings report, which is going to drop right after the market closes on March 4th. Now, this is a high-stakes moment, and the absolute key to our strategy is that we do not trade before the news. We only react after. Everything we're about to talk about, our whole game plan, comes down to how the stock behaves around this one number. And that magic number is $345. Commit that to memory. This thing is a massive technical convergence zone. We're talking about a perfect storm where the neckline of the recent correction, the declining 50-day moving average, and multiple trend lines all crash together right here. A solid close above this level tells us the correction is over. A failure here? Well, that probably means more pain is coming.
Okay, so with 345 as our line in the sand, our playbook basically splits into 3 different roads.
The analysis actually gives the bull scenario the highest odds at 45%. Well, it's all about the big money. We're talking strong institutional positioning, 48 buy ratings.
For this bull case to actually get the green light, a few things have to happen. First, they've got to beat that $19.1 billion revenue number. Second, they have to raise their forward guidance. And third, we need confirmation that AI backlog is still north of $73 billion. If all that happens, you can expect a powerful 6 to 10% gap up at the open.
All right, now for the base case. This one's got a 35% chance. And honestly, this is the trap. The company meets expectations, but they don't raise guidance. The stock might pop, maybe 3 to 5%, but it fails to really break through 345 with any real volume. Do not enter. We wait.
And then there's the bear case. A miss on revenue, weak guidance for the next quarter, or if they even hint that that huge AI backlog is shrinking, the price action would be a violent gap down, probably sending the stock right into that 280 to 295 demand zone. But hey, if you're getting value out of this deep dive, this level of detail, do me a huge favor. Take a quick second, hit that like button, subscribe, and maybe even share it. It really helps us make more of these explainers for you.
All right, let's talk execution. We only, and I mean only, even think about making a move if that bull scenario plays out. This is all about discipline, folks.
So here it is, our 5-point green light checklist. Number 1, the stock has to close above that magic number, 345. Number 2, we need to see huge volume, over 35 million shares, to know the big institutions are buying. 3, revenue has to meet or beat $19.1 billion. 4, the MACD indicator needs to be turning up, showing us momentum is shifting our way. And 5, the overall market, the S&P 500, has to be trading above its 200-day average. We need all 5 boxes checked, period. Our first target is 352. The moment it hits, boom, we sell 40% of the position. Target 2 is 380, and we sell another 30%. At our final target, the all-time high of 415, we let the remaining 30% run. And the whole trade is protected by a hard stop loss at 295. Let's look at the timeline, because this shows exactly how the decision-making unfolds almost down to the minute. March 4th is the main event. March 5th is our go or no-go window. March 7th to the 10th is our first window to take profits. And we have an absolute drop-dead deadline to be out of this thing by March 23rd. And at the end of the day, when that opening bell rings on March 5th, it all comes down to this really simple decision tree. Path A, price rips through 345 on big volume, we're in. Path B, price is kind of hovering around there, but the volume is weak. We sit on our hands and wait. Path C, the price drops. We do nothing. We stay flat and we're just glad we missed the trade. It's really that simple. So there you have it. That was the tactical playbook. But hey, this strategy didn't just come out of nowhere. For the full fundamental story that this whole thing is built on, I'm talking about the deep dive into that $73 billion AI backlog. You can find a link to our full-length analysis right down in the description. So what do you think? Let us know in the comments what stock you want to see us put under the microscope next. And hey, don't be a stranger. Come join our communities on Twitter, Telegram, and Reddit to keep the conversation going. All the links are, you guessed it, in the description.